Cameron, I got one this week. It said, hey, he wanted 35% net income. Great, love it. And he said, hey, what if I just increase my pricing by a little bit more than 8%? Will that get me to 35% net income? So Cameron, I'm going to turn this over to you. It has to do with numbers. That's your expertise. I think this one's fun. If an owner just raises pricing by 8%, how's that going to get them to 35% net income?
There's obviously a lot at play when you think about increasing revenue from a price increase. How are you adjusting your level of expenses to reach a certain net income ultimately, right? And then taking that net income divided by revenue to get kind of net income margin, or even simpler looking at gross profit margin, right? Just affecting revenue and your cost of services. Regardless, right, whatever it is you're trying to calculate or back into, the dashboard has a goal seek function that kind of breaks down these various levers. And you can change, price this percentage or decrease volume of services this percentage, or increase variable costs, decrease variable costs, fixed expenses. There's kind of a litany of things you can change, and the goal seek tool will tell you this would be a predicted outcome based on that. So this example specifically though, hey, I want to reach 35% net income margin. So the goal seek, you could simply go in there, increase prices by 8.16%. And if everything else stays the same, the volume of services you're doing, your level of variable costs or cost of services, your fixed expenses, it'll tell you what your margin would end up being approximately. More importantly to think about is when you do have price increases, well, is there going to be a volume decrease, right? Will there be any attrition from people or customers leaving, right? Very rarely is there a price increase of 8.16%, not a single client leaves. Now you might replace them, so the total number of clients might stay the same, right? But there's probably going to be some level of attrition. And then on the variable cost side, are you saving any money on, maybe bulk discounts with vendors? Are you able to get more efficient with routing, so you're spending less fuel? Are you able to more efficiently compensate technicians, so those costs come down? All these different levers are impacted and ultimately play into margin. But once again, that's a conversation we can have with clients. We can show them the tool. They can use the tool themselves.
I love the goal seek tool, and I think two big ways. I even got quizzed on this one. Hey, if you want to increase your gross profit margin, like what levers do you need to do so, right? And I think the old former wannabe accountant in me, would have said increase volume or top line revenue. When you go to goal seek, it tells you the levers and it tells you how much. And it's not, if I do increase by, price by this and decrease my direct cost by this, then I'll get to this goal. It's working the other way, which I love. And so let's just say we want to see a 65% gross profit margin and you have a 60% going into the tool. You set your goal and then you work towards your goal by, hey, I think we can commit this much to a price increase or decrease this much by direct cost. That will get us to that goal. It's working almost like reverse engineering into it. And so I love that. Changes the way how you think through it, and very confidently, like how from 50,000 foot view, what do we need to do to make that happen?
And I think the gross profit margin is the easiest one because there's just those two levers, right? Price and my variable cost of services is a little more simple to get your head around.
Yeah.
Right? Every client talks about price increases, right? Should I do one? Should I not do one? How much do I do? What's really going to be the impact of it? So a lot of clients will be like, well, I'm going to do a 5% price increase, just because, like, I hope it works out. I don't really know. I don't really know what the impact's going to be, right? The goal seek analysis gives them a good feedback of, oh, okay, this is kind of what a 5% price increase would mean to my financials. And then when you look at gross profit, right, the actual dollars, you can layer in some sort of level of attrition or not, and see in terms of absolute dollars, like what's the impact to my gross profit. There's kind of a feedback mechanism there too with, hey, I'm going to increase prices, but I don't really know what it's going to mean or how it's going to impact. Well, this gives you, a good idea of what the potential impact could be or will be.
Thinking about setting targets and like, especially I think coming out of the goal seek tool, when we have our personal like New Year's resolutions and, hey, this is what I did last year. This is what I plan to do this year. We see the same thing, I think, in business. It's like kind of recapping. They're looking at their annual reports more thoroughly than they look at their monthly reports. They're setting their targets for the year. They're able to with our KPI dashboard. How do we set those targets? And is it something that has to be static and flat, like year round, or what options do we have there?
You mentioned seasonality. Whether you have seasonality or not, whether it's minimal, we can set targets for you month by month. Important thing to think about is, and we, especially when we get new clients, if the data they have from historical periods isn't necessarily accurate, then if they say, well, I'm trying to grow by 15% this year, well, 15% over an incorrect number, right? That's not super helpful. So first and foremost, right, helping clients get their books clean so that the historical information that they might be comparing to or building targets off of is correct, right? And then as they're with us, year over year, month over month, there's that confidence in the numbers. But yeah, in terms of actually setting the targets, some clients say, hey, I want to do, 4.8 million this year. Just divide it by 12 and that will be my monthly revenue target, right? And if that's what they want, okay, cool. We can simply do that. But if you want to get granular and say, well, I'm trying to grow by 20% this year. Okay, cool. We can look at last year's monthly revenue and increase each month by 20%. Or if there's going to be some level of seasonality, maybe the summer months are significantly larger, we can make those months grow by 25%. Year over year, and maybe the winter lower months only grow by 10% year over year, right? Point is, you have the flexibility to make very specific monthly targets that could have seasonal impacts, might not, right? It's really whatever you prefer to see as a business owner.
I like to think of as FRAXN of a company and full of people that want feedback and accept feedback, and we want to hear what our clients want and need. Taking that to reports and how reports have evolved a little bit over the years. What does that look like when a client asks you for custom report or specific report? Maybe it's year over year or month over month or rolling, trailing 12-month numbers. How do you take that feedback and what we could do for them?
For the most part, any type of financial statement a client has requested, it's included in our monthly reporting package, right? Whether it's a month over month look, month this year versus same month last year, year-to-date comparisons, rolling 12-month, right, or TTM, LTM, whatever you want to call it. For the clients that do have budgets, a budget versus actual, right? So there's a lot of variability in the types of reports that we can present, right, in our reporting package. There are occasionally random reports that clients want to see. Maybe it's for a manager, right? So they don't want the manager to see everything down through net income. Maybe it's just revenue and cost of services and gross profit that they want to show the manager. Well, great. We have the flexibility to create, one-off P&Ls and kind of tailor it to what the client wants to see, right? So in that example, for a manager, P&L can be revenue minus cost of services gives you gross profit, right? You can have this month versus last month. You can have as a percentage of revenue for each, the change in dollars, the change in percent. There are one-offs that clients want to see, and we're happy to provide those and work with them to get them what they need, right? Another one would be we use the accrual method for all of our bookkeeping. Some clients might want to see something on a cash basis every once in a while, or if they file on a cash basis, we might need to provide cash basis financials so we can do the appropriate tax planning or strategy there, right? So we can produce that as well.
I think of the one, I don't know if it's because it's something I would have needed back in the day, especially when cash was tight, but this intra-month cash statement. And so it's a waterfall chart. Can you explain? We've had a couple clients ask for this. They've got these upticks and downticks in their cash during the month.
A couple clients want to see, hey, during the month, I'm having these cash crunches. And obviously we're getting them reports on a monthly basis. So they're seeing kind of the month to month impact, but during the month, they don't necessarily know where cash is going and what's happening, right? They might have various auto pays with vendors, paying down auto loans, whatever it might be.
Payroll,
exactly. So how often are they running payroll? Weekly, bi-weekly, twice a month, whatever it is. When do they bill their clients? Right. So when's the cash coming in? Is it kind of all up front at the beginning of the month? Is it throughout the month? Right. This kind of intra-month cash flow analysis that you mentioned was helpful for this client because they could see, okay, typically in a given month, I have these big expenses on these days, right? Whether it be payroll, whether it be, their Toyota Tacoma, truck payment, whatever it might be, they could kind of see in this analysis, hey, these are the days I have larger expenses. These are the days when the majority of my collections are coming in from clients, and it helps them understand, these are when I'm going to have these cash crunches, and I can plan accordingly during the month. That's a really helpful analysis for the clients that feel that crunch and feel that pain. During the month, am I going to have the cash I need?
If you're asking any of these questions in Q1, that's normal. The difference with FRAXN is you don't have to stay stuck there. So if you're a service business and you want bookkeeping and financial reporting that actually answers these questions, hit the link in the description and we'll show you what FRAXN can do for your business.